Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It is lecture time. And this week's topic, guys, is on prepping for success in trading for this year. A lot of you guys want to get your year off to a good start. Well, this is the lecture for that. Okay, it's very important because I think a lot of you are coming in with some misconceptions, some ideas about this business that are false, and also you're not properly preparing yourself for what lies ahead. And if you don't do that, you're going to have a very challenging year. Trading is hard enough. Why would you want to make it even harder on yourselves? I would imagine you wouldn't. So today we're going to talk a little bit about that, some charts that we're going to go over in terms of trades that you should be taking versus trades you shouldn't be taking. And then on top of that, we're also going to talk about trades you think are good but really aren't good. And then we're also going to talk about sometimes there was what I call next level trades, right? So you read the textbook, you go through professional trading strategy, and you think to yourself, okay, that's a good trade, or that's not a good trade. In this case, we're going to talk about trades that maybe don't look perfect, but are actually really good trades, okay? So newer traders, you're gonna have a harder time with that because I want you focusing on, quote, textbook patterns just to learn the process properly. But as you gain a little bit more experience, there will be trades out there that maybe don't look perfect at your initial first glance. But once you dig deeper or go into a lower time frame or a higher time frame, put all the pieces together, they end up being some of the best trades that you can take. So there's a whole lot of topics that we're going to talk about today, but they all have to do with prepping for success in the new year so that you guys can have a productive year and do better than you did last year. Because I've been finding way too many traders are coming in completely unprepared because they're just not understanding what's required. Right? It's a challenging business. There's a lot of things you have to have. You have to have good money management. You have to have a trading journal. You have to have a trade tracking spreadsheet. You have to have an education. You have to have some market experience, all right? You have to understand entry, stop, target, taking your stop losses, knowing where your target is, holding to target, learning your personality style so that you can maximize that for your trading. You have a lot of things to take place. And the one area I think a lot of people fail is that they're like, oh, well, everybody says it's not that hard. It is that hard. It's really, really that hard, okay? So anyway, it's a good lecture on how to start your year right, okay? And it's one that I think if you watch it and go through it a couple of times, you'll start jotting down things in your trading plan. Or if you don't have a trading plan, you'll build a trading plan. You'll have proper money management. You'll have proper trade management. You'll learn certain patterns. All these things are going to be vitally important to successful trading. And remember one last comment. You are not going to build Rome in one day. You're not going to be an expert professional trader in just 1 year. I know you think you are, and I know you think you're special, but you're not going to do this in 1 year. If you break even your first year, you did a good job. If you break even your first year, you did a good job. Okay, so keep that to heart. Don't be discouraged. It's going to be a roller coaster ride. Don't get discouraged. It's part of the business. All right, so I'm Jared Wesley of Live Traders. If you like this video, please click the like button. If you like the channel, please smash that subscribe button. Also put those click notifications on there, guys, so that you can get these email updates when I drop a new video every Wednesday. Without further ado, let's dig in. This week's topic is prepping for success in trading in 2021, I suppose. Yep, I stole that title a little bit from the man at the top there, Mr. Anmol Singh. He has a book called Prepping for Success, and for those of you that don't have it, then you should go get it. All right, go on Amazon and search for Prepping for Success. It's a good book, well beyond his years in terms of when he wrote it at 27. So well done, Mr. Singh. Shameless plug for his book, but we're not going to be talking about his book today. We're going to be talking specifically about trading and how you can be a little bit better in 2021 and things that you kind of just need to take to heart. And I think at this point in the year, it's always good to be prepared for a new year. Meaning there are things you did last year that you could have done better, and there are things you did last year that you did really well and you'd like to emulate again in the new year. But before we get into any and all of that, we need to talk about When will the insanity stop? When will the insanity stop? I think we all know the answer to that is never, but doesn't mean we can't have a little fun each week. And I do mean it when I say it. It's meant to be serious fun. Okay? This stuff is not a joke. I don't put these in here so we can laugh at other people. I actually put this stuff in here so we can learn from other people. All right? I mean it. I'll repeat it. Not so we can laugh at other people, so we can learn from other people. Because some of you listening have done some of the same stuff. All right? So the first one, you guys are going to think isn't so bad. You're like, yeah, whatever, Jared. That's a little bit meh. But it's just as bad as any other one. All right? So good evening. I was a little good on demo, and now I've blown up my real account after 2 days. I don't know how that happened. I have traded a lot. The real account was $700, an intro account with Teft. Don't know who Teft is. Maybe it's an offshore broker, European broker. I don't know. Can you help me figure out how to fix it? Now, some of you will look at this and go, yeah, whatever. It's $700. Who cares, man? Well, two comments. One, $700 to somebody is a lot of money, but that's not the point here. Whether it's 700, 7,000, 700,000, 7 million to blow up any account in 2 days. Think about it. You go from demo trading to minus $700 in 2 days when you switch from demo to real money. Okay? That's ridiculous. Okay? So again, take your mind off the $700 part and think about the destruction of an account in 2 days. Clearly, you weren't practicing in your demo account properly. Practice properly. Many of you out there, and the reason I chose this example was because I think there are a lot of you out there that think a demo account is a demo account, which means you don't treat it like real money. You're like, whatever, I'll take this trade. Oh, whatever, I'll take that trade. I'll take 8,000 shares of this trade. Is that how you're going to trade when you go to real money? Oh, no. I only have like a $4,000 account. I could never do this with real money. But it's demo. And you get these results that are ridiculous. You're like, I made $10,000 last month in the demo account. When there's no way you could have never done that in real money because your account is, a couple few $1,000s, right? So what I'm getting at is when you trade the demo, treat it like it's real money. Have a trading plan. Have stop losses. Have targets. Okay? It's never going to be perfect because simulator trading is unrealistic. It gives you unrealistic fills. It doesn't have the same emotions attached to it. But please, okay? Treat it like it's real money, okay? Someone's asking, how can he trade with only $700? Well, perhaps he's in Europe, Edmund, or he's offshore broker. A lot of folks are using that kind of stuff. So, yeah. But anyway, the point simply is treat paper trading as closely as you can to real money. $5 or $10 risk on paper. That's what you're going to trade when you trade real money, okay? All right, next. And this one is disappointing, but it's the reality, okay? It's disappointing, but it's the reality of the business. And here it is. I have two for you guys today. You ready? Boom. This was from a while back. I saved a screenshot of this from maybe a year ago. This is a little bit old. You guys know who that is. Well, the name's right in the middle. The Dave Ramsey Show. We lost over $300,000 day trading, okay? And as you guys can see the caption below, and people wonder why or how day trading gets such a bad name. Now, I didn't actually listen to the segment, but I would venture to guess that Dave Ramsey ripped this person a new you-know-what and said, day trading. I get calls all the time about day trading, and day trading is such a scam, and it's such a loser's business, and blah, blah. Guaranteed, right? I didn't listen to it, so I don't know what he said, but I'm guessing he chastised these people a little bit with a little bit of sympathy involved as well, okay? Now, here's the truth. Dave Ramsey actually gives out really good advice. Stay out of debt, right? That's good advice. Don't buy things you can't afford. That's good advice, okay? But you guys wonder how and why this industry in general gets such a bad name. It's a bad rap because of people like that. Idiots. Yes, I'm sorry to say it. Idiots who lost $300,000 day trading. How do you do that? How is it even possible? By being stupid. Because you're listening to some Google ad about some guru furu who told you can turn $500 into $1 million, deleting their tweets nowadays, I'm sure. Ha, wink, wink. You know who I'm talking about. Okay? Scrubbing the past. That's what happens. when you follow people that are losers, right? When you follow people that sound too good to be true, okay? And then when somebody that has credibility like Dave Ramsey has somebody on their show or a caller that goes, I lost 300,000, guess what? Thousands, maybe millions of people listen to Dave Ramsey. Now, all these people in their head think, oh my gosh, that day trading stuff, oh my goodness. You should never have been in the position to do that because you have stop losses and you have money management. You have all those things that should never let you or put yourself in that position. But it gets popularized by people like this. And it's not Dave Ramsey's fault. It's not his fault at all. He's just taking a call from a caller that he thinks might be popular. And I'm sure it was. Okay? So anyway, let's dig into this stuff. I hope those two guys, one significant at $300,000, one at $700, the money's not the point here. This is serious stuff. That's the point. This is serious, serious stuff. Okay? So, let's move on. So what's this year going to look like for you on December 31st? When you look back, right? 359 days from now. What is this year going to say to you at the end, right? Is it going to say goal, plan, action, and what's going to be in that last box? What's it going to say? Is it going to say goal, plan, action, excuse? Because I think for many of you, and this is just me being me, and I'm not Tony Robbins, I'm just me. For many of you, this is what's going to say goal, plan, action, excuse. Okay? Your end of the year on December 31st is going to look like that. Okay? Goal, plan, action, check, excuse. Okay? It will. Because most of you aren't going to follow the rules. All right? And let's read excuse. I know what it means. A reason or explanation put forward to defend or justify a fault or offense. So how many excuses are you going to make this year? Hundreds? Thousands? Every other trade? Okay? Is that going to be you at the end of the year, or is it going to look like that? Is it going to be goal, plan, action, achieve? You have to ask yourself that, because the one area in this business, and we talk about it frequently, and don't worry, guys, don't worry. There will be charts today. Don't worry. It's not just going to be some pictures. I know you guys can't handle that. You got to have your charts, got to get your fix, The problem is people like to talk, right? This is a commonality in the world. This isn't just in trading, right? Talk is cheap, walk is expensive. We went through this a year and a half ago, right? When Unwall said, I'm going to do 2 RL or nothing. And then in the last 3 to 6 months, raised that to 3 RL or nothing. Talk is nice, man. But the walk is so much harder. It's so much harder, right? You see boxers and they talk a lot of smack before the fight to hype the fight. But when you're locked in that ring, okay, it's a lot different. The walk is a lot more expensive. So you got to ask yourself, what's it going to be for you this year? Is it going to be a year full of talk, popping off? Or is it going to be a year full of walk, putting in the hard work when no one else is looking, doing the right thing when no one else is watching? That's called integrity. Okay? So which is it going to be for you? Now, I understand right now as you're sitting here listening, oh, of course it's the walk, Jared. Absolutely. I'm going to walk the talk, baby. No, you're not. You're just lying to yourself, and you damn well know it. All right? You know it. About, I don't know, maybe 5% of you are actually going to walk it this year. The other 95% are going to talk it. You're going to talk your way out of this business. You heard me. I'm going to repeat it before we get into the really good stuff. 95% of you listening are going to talk your way out of this business, and the other 5% are going to walk your way through it. Bank on it. Bank on it. Okay? Come back a year from now. Watch this video 1 year from today and ask which one you were, the talk or the walk. Okay? Bank on it. All right. Let's dig into the good stuff. Some of you have seen this slide because I used it recently. Don't worry. It's mostly new slides today. There are a couple old ones, but it's mostly new ones. All right? Trading is hard. Money management is everything. Simulators are not real. It's going to take a lot longer than you think, and shit happens. All right? Getting filled isn't easy. Internet problems, frozen platforms, market servers slow down, HFT shakeouts, random news, whatever. Okay? There's no holy grail. So have a plan, meaning set yourself straight, set yourself right to start the year. Because if you don't start the year right, it's going to be a lot harder to turn it around in the middle of the year after you've made a lot of mistakes and bad habits that you've ingrained in yourself. So come in understanding what's required, what's expected, what's needed. And money management's at the top of that list because you won't last a year without money management. You won't. I mean, look at that trader. 2 days blew $700. It's not a lot of money, but it blew up their entire account in 2 days. Okay? So your process has to look something like this. This is a slide right out of Professional Trading Strategies. Okay? Right out of it. You need to plan, implement, measure, assess, and improve. See this first one here on the left? Right there, the plan? You guys seem to just skip that. Most of you just skip it. Or your plan isn't worthy of being written on a napkin or the back side of a napkin. Honestly, how many of you came into this business and had a genuine plan? And I don't mean to make money. I mean written down rules with a time frame, how much money you're willing to invest in your business. And I don't mean the size of your trading account. I mean the amount of money you're willing to invest in yourself to succeed in this business. How much time you were going to give it, the expense it would cost you to trade for 1 or 2 or 3 or 5 years. It costs money to trade. And I'm not talking about your trading account. I'm talking about lost income if you quit your job. I'm talking about potentially lost revenue from some other business. I'm talking about computers or internet or chairs or office desks or education, all those things. Most of you didn't do it. Well, you didn't. You're just like, man, trading sounds really cool. I'm getting laid off. COVID, my company's not looking so good. I want to do something else. I don't like my boss anyway. I think I'll be a trader. You know, those articles online and videos, or these guys are driving around in McLarens and they're doing this and that. It's all bullshit. Okay? Trading's hard, man. It's really hard. It's like the hardest thing you'll ever do. You hear me say it every day. So most of you have failed before you've ever even taken your first trade. I mean it. You've failed before you've ever started because you didn't have a plan. And if you did it, like I said, wasn't worthy of being even put on a napkin at McDonald's. All right? So put together a plan, all right? Try to implement the plan. And I do mean try, because you're naive when you start, and you're going to make some mistakes, and that's normal, and that's okay. Try to implement that plan. And then after you try to implement it, you're going to measure the results, right? You're going to measure the implementation. And probably you didn't implement it as well as you thought. You're going to assess those measurements, and then you're going to put together some improvements. And you're going to do this a lot in your first 1 to 3 years of trading. The more experience you gain, the tighter it gets. The improvements are smaller, right? The initial learning curve is steep. But many of you aren't even tracking your trades, right? You're not even journaling your experiences. It's all in your head. It's some subjective. Notice, like, you'll remember the trade that got away. Oh, I knew I should have taken that trade. It's up like $20 right now, $30 right now. No, you wouldn't have. You didn't take it for a reason. But you're not journaling that. You're not putting those in your spreadsheets. You're not being fair to yourself with regard to trying to succeed in this business. And the reason that is, guys, and I'll move on from this in just a second. The reason that is there's nobody telling you what to do. Right? There's no boss looking over your shoulder saying, you better do this or else. It's just you. And you give yourself far too much credit. You all think you're special. You all think you're better than the person next to you. It can't be true for everyone, right? It just can't be. Some of you will make it, and many of you won't. It's just the way it is. It doesn't mean you're not capable. It likely means you're just not willing to stick through the crap, the garbage, the shit to get to the other side, like in Shawshank Redemption. You're not willing to do that. And the people that are will succeed. You're all hyped up right now. That'll change in 3, 6, 9, 12 months. The market will get to you. It gets to everybody. The question is, how will you handle it when the market gets to you? Not if the market gets to you, when the market gets to you. Okay? So, the first thing you got to understand, all right? And this is for everybody. And I don't care if you're a seasoned trader or a new trader. The first thing you have to understand, protect yourself at all times. right? I actually watched this fight live, and I remember it happening. Poor guy. Protect yourself at all times. In the end, you have to protect yourself at all times, says Mr. Mayweather. He's a pretty successful guy. Whether it's in the ring or out of the ring, he's done all right for himself, okay? A man to be respected inside the ring for sure. Outside the ring, he's had his ups and downs, but that's not the point. In trading, protect yourself at all times. What does this mean? It means use a freaking stop loss, okay? Use a stop loss. You see this loss percentage required gain? It's not so bad at the top. You lose 5, 10, 20%, it's not so bad. Once you start getting down to the 40%, 50% range, look what you have to gain to get back to even. You lose 50% of your account, you need 100% gain to get back. And guess what? If you lose 50% of your account, you should lower your risk because you're not capable of trading high risk, which means you're going to need even more than 100% now because you're trading lower risk. And then what most people end up doing is what? They end up risking more money when they damage their account because they're like, I need to get it back. So they get riskier, more aggressive instead of less aggressive and less risky. Don't do that. So protect yourself at all times, or else you will be this. I brought this up a year or two ago. I'll rehash it. You will be this. This isn't trading. This is gambling. I'm going to have a heart attack. I'm down $2,000. I don't know what to do. Hold or cut my losses. I'm down $4,000. So bad he had to repeat it twice, once 4 minutes later. You don't ever want to be in this position. Trust me. You don't want to put yourself in that position. Keep your hand away from the cookie jar. It'll bite you. Okay? Or how about this? Trader lost 20% of his account not using a stop loss. Naked puts at 220. Got exercised when a stock dropped to 215. Wait for it. My mental stop loss did not get completed as overnight it tanked. Well, it's kind of hard to have a mental stop loss while you're sleeping or have a hard stop loss while you're sleeping, right? Yeah, of course your mental stop loss didn't kick in when you were sleeping. Duh. It tanked, and today it's now trading around 169. 5K loss on a 25K account. An expensive educational fee. Why? 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 All right, one more. This is a real one too. I think I showed this one to you guys about 6-8 months ago. Bitcoin. All right. So, trader lost 50% of his account not using a stop loss. Somebody sent me this. It's a shame. They sent me his P&L. I have the P&L for this, and I couldn't find it yesterday. Anyway, breakout. Not bad, right? You're sitting there going, okay, this isn't a bad breakout. Trader took a pattern. So far, so good. Trader took a pattern. Trader didn't take stop loss. Not taking stop loss took 50% of their account. Big shark bite out of their account. Why? For what? Guys, how many trades are you going to take this year? Hundreds, maybe thousands for some of you. Hundreds for me, thousands for some of you. Why would you let one trade take 50% of your account? I'm going to just say it one more time and have like a 5-second moment of silence. Why would you allow one trade out of hundreds, if not thousands, to take 50% of your account? Stir on that. Really think about that. So it goes back to protect yourself at all times, or else you're just not going to be here. All right? You'll just be the person I talked about. You won't be around. Protect yourself at all times. All right? So now, next question is, once we've gotten through the I'm going to protect myself, I'm going to protect myself, okay? Are you going to take good trades? All right, real quick, guys, I'm going to adjust my my FSLR here. All right, I'm going to raise my stop. Probably up to this area, guys. I'm going to give it a little bit of room. All right, so raising my stop, guys, 98.50 on this. We'll see if we can get a break over this area, which would be good. If we do, I'm going to take some shares off. Right up in this whole number area. I'll get back to the lecture in just a second. All right. But once I get back to this break-even point, which is right about now, I just took some shares off, placed the bracket, And I'll put this order back here. All right. And we'll move that way up there. We'll come back to that later. All right. Hold on one sec. Let me update this. FSLR, stop. 98.50. Okay. Let's get back to the business at hand. So, are you going to take good trades or are you going to take crap? Let's find out. Let's take a look. So, this is a chart we saw, I don't know, a few weeks back, right? Beautiful chart. It really is a nice chart, okay? Consolidation, breaks out, pulls back, rips higher. You say you're going to take trades like this. You're going to put pictures of these in your trading plan, right? You will. I know you will. We all do. They look great. They're awesome. They're your roadmap. But then, in reality, you end up doing something like this. And you know what's an appropriate example of this? And I didn't put it in here because I totally forgot. It slipped my mind. How about CRM today for me? How about CRM today for me? I took CRM right at daily support. Multiple bottoming tails. It stopped me out. That was a boneheaded trade. That was a foolish, foolish trade. An inexcusable mistake on my part. Well, you say you're going to take good trades, but we go back to that action slide. Are you going to talk about it or are you going to walk it? So here we have a wide range bar, a narrow range bar, and a little bit of a 3-bar play. But look where the 3-bar play is happening. Bottoming tail bounce, pulls back up. That's where it's happening, right there. So right here is that 138 area, 137.50 area, right where my cursor is. Okay, right there. And what? Right at support. Sitting on it. Oh, I forgot to look to the left. I hear that all the time. I get it in emails, I get it in private messages, I get it. I forgot to look to the left. Why? How? How'd that happen? It's your job, right? Your job is to walk the walk. So this is an example of trades that people will take, and then they'll wonder why it didn't work. Okay? Next. Wow, this looks like a nice 3-bar play, right? You're engulfing a red bar here. Narrow range resting bar right here, right? So we have red engulfing bar. Narrow range resting bar right here. Oh, yeah, this is sweet, right? It's awesome, yeah? Is it? How's it look now? Now look at this 60-minute chart. 1, 2, 3, 4, 5, 6, 7, 8 bars up, and the 8th bar is a wide range bar. And here's the rub, and I use this one specifically on purpose. It worked. It worked. It worked. So this is reinforcing bad habits. You see, you're going to look at this and you did some good things. You picked a wide range bar and you picked a narrow range bar. You did some good. But you didn't look at the larger picture, right? You didn't see how extended this stock was. And to make matters worse, you got away with it. You got away with it. Okay? So be smart. Here's another example. How about that? Wide range bar, narrow range bar. This was from yesterday. Wide range bar, narrow range bar. Somebody in the chat room took this. Rip. Look at the daily chart. You're up 1, 2, 3, 4, 5 days. And now it gaps because it opens right there at $50, right into resistance. So 1, 2, 3, 4, 5 days into resistance. 5 days into resistance. And this thing worked, and it didn't work. It ripped. Ripped. Bad habits. Did some good. Wide bar, narrow bar, rip. Now the first bar was a little bit excessive, a little bit big. But once you look at the higher time frame, you're in trouble. And you got away with it. So the question is are you going to do stuff like this, right? Are you going to do stuff like this? That's the question. Stuff like the last 3 slides or trades like this. I know what you're going to say. The question is, what are you going to do? I don't care what you say. It doesn't matter. It doesn't make you any money. By the way, guys, I'm going to move to even here. All right. Just took some off and going to break even. Got it? FSLR break even. Now it's time to put this way up at 103. Okay, give me 1 second, guys. Why I drag this ridiculous order all the way up there. All right. Okay. So, are you going to take this? Or are you going to take what we just saw? Okay, that's the question. Walk the walk, talk is cheap. Now, this is an example of walking the walk. Here's a stock that at the open of the day looked good, right? Gaps up. Notice the daily. We'll start over there. Red bar, 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 red bar. 8 red bars near some support. Gapping almost entirely over that red bar. In fact, it did. It opened above the red bar. So this is a stock that's extended into support, which should automatically equal a bounce. But here's the rub, guys. Not all trades are this perfect or this straightforward. This is what I would consider a relatively simple, straightforward trade, right? What that means is the stock was extended down on the daily. It gapped up over a wide range red bar, exhibiting shock value after an extended move. Good, good. Plenty of room to move higher. Good. Volume is great. A lot of institutional interest. Good. It sets up what looks to be a super play, right? An engulfing bar, turnaround bar with a narrow range bar, and you were going to look to get in over here. And then it rolled over. Now, Unwall took this trade yesterday, I believe. Anyway, it rolled over. And many of you took your eye off it. It moved higher, pulled back, and the pullback is beautiful. It's just over a 50% retracement. It's sitting at support, bottoming tail, doji bar, uptrend, great gap. It's pretty straightforward, right? I mean, there's not a whole lot wrong with this. And it did go 2R. That's nice. And we should all strive to trade these. But here's the rub. Right here. Learning how to trade. You see, a lot of people take professional trading strategies or some other course out there, and they're like, all right, I have the textbook. I'm good to go. Well, that's like, I use a lot of boxing analogies, but that's like studying a fighter. And now you feel like you know their tendencies. But guess what they're doing? They're adjusting for you too. So their tendencies might change a little bit because they're focused on you, you're focused on them. Right? Very few people are good enough to go out and just say, I'm me, I'm not going to change, I'm coming after you. Beat me. Most people, especially in the fight game, they make adjustments. Hey, I'm fighting this guy, he's really good with the left hook. That guy's a good grappler. Whatever. So there's more to trading than just learning textbook patterns. Oftentimes, we need to evaluate information quickly. And this is where new traders struggle. Sometimes something that is not perfect per se or per the textbook is actually an outstanding trade. And this one bugs the you-know-what out of new traders. It bugs the crap out of you guys. It's not perfect per the textbook, but then I come and tell you how good it is. And you're like, Jared, I give up. I throw my hands up. I don't know. These things come with time and experience. We're going to take a look at a couple of those. I'm not going to leave you hanging. I'm not just going to say something and leave you hanging. I'm going to give you a couple examples. My point I'm making is, when you're new, focus on the textbook. That's your guide. But realize the textbook, yes, they are real trades. But realize, too, that the market changes here and there. The market goes up and down and round, and some environments are very giving and give perfect textbook patterns that never look back. And other environments shake out twice, why we have to apply the 84% rule to them, like FSLR, actually. It's an 84% rule trade. This comes with experience. This comes with looking at thousands of charts. This comes with learning from other people. So let's take a look. So here's an example of a trade where initially you'd sit there and you would say, I am going to follow the textbook. I am not leaving my wingman, Tom Cruise. I'm not leaving my wingman. What does that mean? Well, it means that bar number 3 right here, right? Bar number 1, bar number 2 at the bottoming tail. You have bar number 3. Well, technically, if we're being very, very specific here, this is more than 50% of bar number 2, isn't it? Somebody asked this question yesterday. This stock or this trade was from yesterday. Somebody asked that question, like, well, I chose not to take it because bar number 2 here, in this case it's the third bar of the day, was not in the upper 50% of bar number 1. In this case, it was like 60%. So per the book, Jared, I just could not take it. And you know what? If you're brand new, that's the right thing to do. Don't take it because you don't understand past that first level, so to speak, right? You're just trading on the basic level. That's fine. But if you dig deeper and you look at the 1-minute chart and you look at the 15-minute, so straddle the trade, look at the higher and the lower, this is a no-brainer. You have a stock that moved up, shook out right here down to 115 on the 1-minute, left a massive bottoming tail, comes right back to 117. Shakes out again. Oh my goodness, this keeps getting better. You take it at 117, you put your stop right here at 115.50. Could you have used 115? Sure you could have. You could have. And this thing moves higher to the tune of $3.50, which is 2 to 1. And you take a look at the 15-minute. Not bad. But at first glance, you initially get excited and go, ooh, that's nice. And then you step back and go, but it's not textbook. But this is where that second, third level trader comes in and says, but wait a second. Let me look inside these bars. Let me look inside this chart and go, wow, bottoming tails mean buyers are stepping up. Every time the stock tries to sell off, every time sellers try to step up, buyers beat them to it. And that makes for a great trade. Shakeouts, turnaround bars, green bar ignored, money bars, right? That's what we call them, money bars, right out of the textbook, by the way. Okay, are awesome. You want that on every trade. Exactly, Carlos. It's battle tested. You want that on every trade. In this case, it happened twice, right? So at first glance, it's like, wow, that's nice. Oh, shoot, it's not in the upper 50%. Then you dig in and it turns out to be a pretty good play. Here's another example. Remember this one yesterday? This is tough. That's why it says decisions at the top. Initially, wow, wide bar, narrow bar, rip. And this thing pipped. This thing went $10, $12, $15 on less than a $2 stop loss. I mean, this was like an 8R trade. So at first glance, especially to the new trader, wide bar, narrow bar, rip, 3-bar play, we're done. Let's go home. It's not that simple. Now, you look at the 15-minute chart, and you're like, okay, we are gapping into a red bar, right? The stock closed yesterday at 166. You can see that. You can see it right there. Closed right in the 166 area. Today, it opened in the 172 area. So it gapped up at least $6 and took out half of yesterday's bar. Because, guys, I don't need the daily chart here to tell me that yesterday was a wide range red bar. It opened near the high and closed near the low. Period. This is a wide range red bar on the daily chart. Yes, it's a 15-minute chart, but when you look inside the bar and you gain experience, that's a wide range red bar on the daily chart. And we gapped about 50% into it. So we have a gap surprise. Cool, good, shock value, awesome. But what do we have here at 176, 177? What do we have? We have some junk, don't we? Shit. Because this 3-bar play is happening at 175.50. Like right there. This gives us some pause, doesn't it? In hindsight, this looks like a no-brainer. For sure I would take it. In hindsight, of course, who wouldn't take it? In hindsight, but in real time. would you have taken it? And the question is, I don't know. I don't know. The 2-minute was so nice, it's hard to turn your back on it. But that 15 minutes, trouble. Stock moved up $3 or $4. It's right at that gap fill and some resistance right there. And then once you do take it, there's more resistance at the 181 area, which you'd probably be out of it by then, but you understand what I'm getting at. This is what I am talking about with regard to sometimes something that is not perfect per the textbook is actually an outstanding trade. And vice versa. Something that sometimes looks perfect per the textbook, in this case on the 2-minute chart, isn't perfect because of perhaps the higher time frame, the 15-minute in this case. This is what I say learning how to trade. So in the beginning, you want to just be able to walk the walk. You put together a trading plan and you say, okay, these are the rules and I will follow them. But you're going to learn that experience is one of the number one things you can get. You're going to start to see patterns. And I don't mean 3-bar plays and buy setups and breakouts. You're going to see patterns in your own personality. You're going to see patterns in the market. You're going to see patterns in trading. You're going to go, you know what? I know that that isn't perfect, but man, the last 5 times this has happened, the stock ripped higher. And then you're going to put that in your journal and you're going to sit there and go, okay, I'm learning. I'm gaining experience to make my trading better. Okay? So I want you to think about that. In the beginning, just take textbook trades. But if you don't track those trades, if you don't journal those trades and journal your experiences on trades you didn't take, right? In professional trading strategy, I say to you guys all the time, have 3 binders. Green binder for winning trades, red binder for losing trades, and blue binder for trades you did not take but wanted to take. And then write down why you didn't. And then you're going to go back. And you're going to review it every week, every month. And go, okay, how are those trades doing that I wanted to take but didn't take? Is there a reason that I didn't take them? And if so, was it a good reason? And you might start to see some trends. So it goes back to, again, journaling your trades, tracking your trades. Okay? And one other thing before I close this out. A couple more slides, all right? No, it doesn't suck. Okay? It just doesn't. Monday doesn't suck. Your genetics don't suck. The weather doesn't suck. Your partner doesn't suck. Your negative mindset is what sucks. All right? I clipped this from Unmal. I think he put it on his Instagram a while ago. Okay? Stop complaining. As it says, stop complaining about what's missing from your life. Go and manifest the crap out of your dreams, man. Stop telling me, trading sucks, Jared. Trading's tough. Somebody out there is killing it right now. Question is, why isn't it you? Someone's going to do it. Guys, I don't care what business you are in the world. Does anybody, and again, I don't know if this is a good or a bad example. I don't know. Realistically speaking, be honest with yourselves. I'm sure there will be some people that say yes. Did anybody really believe on January 1st, 2020, that by January 1st, 2021, that Elon Musk would be the second wealthiest man in the world and he would increase his net worth by 500 to 600%? No. What's the purpose of me telling you that? The purpose of me telling you that is anything is possible. You just have to believe it. Anything's possible. Somebody right now is starting trading after you, and they're not walking past you, they're running past you. Somebody right now is starting up a business that will be worth $1 billion next year, or in 2 years, or in 3 years. I'm serious. It's happening right now to somebody. So stop with the BS attitude, man. It sucks. No, it doesn't. It's as good as you make it. And that's not cliche, man. This isn't a Tony Robbins thing. You know, like I'm pretty tough on people. It's really as good or as bad as you believe it or make it to be. That's it. Someone is going to have an unbelievable year this year, and many of you won't. And then you got to ask yourself, why did that person have a great year? You'll say it's luck, but it wasn't. It wasn't. Okay? So remember, this is one of the most powerful slides I go over. All right, I put this in maybe 2 or 3 lectures through the years. This is one of the most powerful slides. The more objectively and accurately you define yourself as an individual and build your trading style around it, the more successful you'll be as a trader. I mean that. That is the one area that most people fail tremendously. Build your style around your personality. Don't build a trading style and then say, I'll adapt to it. No. Look, leopards don't change their spots, guys. They don't. You flex, but you don't really change. So build something around your personality, not the other way around. And remember, those outcome goals are all cute. That's nice and all. Go post up the Lamborghini on your wall, right? Pamela Anderson with the Countach on your wall, right? Great. How are you going to get it? That's the process. See, the outcome is the talk. The process is the walk. Repeat it for you. The outcome's the talk, man. The process is the walk. How are you going to get there? Most of you have no idea. You just like to jibber jabber and say you're going to do this and say you're going to do that, and you don't do it. You know it's true, but you're going to be better. You're going to be different tomorrow. No, you're not. You're going to do the same damn thing tomorrow. You said that yesterday, and you did the same thing today. Right? So just keep that in mind. So here's what's required. Most traders fail because they just don't understand what's expected. You need education and guidance. I don't care what it is on this planet. It's not some sales pitch. I don't really give a shit where you get your education. Everybody needs education and guidance in life. Okay? You need a well-defined trading plan. This is your map to success. Otherwise, you don't know where you're going or what you're doing. Charting software, internet, tracking sheets, defined goals, somebody to help hold you accountable, an accountability partner. Then you're going to need some objectivity and humility. Most people lack the first thing. I lack the second thing. Most people lack the first thing. Objectivity is tough, man. Like telling yourself, man, you suck. You need to be better. That's a hard thing for people. They usually say, well, I need to be better, and I will be better. But they don't really change, right? So the market's always right. It's never wrong. It's you that needs to make the adjustment, not the market. So learn from those mistakes. Get advice from people with more experience. Have an accountability partner. And then at the end of the day, you can't put a price tag on experience. I don't care how talented you are. You still need experience. I don't care if you're LeBron James or Kobe. You still need experience. Okay? So the problem with traders, and I think Cesar is taking my line from me, the problem with traders is we have way too many dreamers and not enough doers. That's the problem with human beings in general. Everybody loves to dream. I know somebody who used to watch Oprah religiously. And Oprah was basically like a drug to her. It made her feel good every day. Look at all these people, successful people. I'm going to be like them. Oprah's book club. Oh, that book sounds great. I'll read it. There's nothing wrong with those things. I'm not suggesting there's something wrong with it. But if that's all you're going to do is watch it, it's worthless to you. Where's the action? Where's the walk? See what I'm saying? The talk is the easy part, man. The walk is the hard part. And most of you aren't willing and ready. You're just not there yet. You're just not. Okay? I know you think you are, but again, another one of my used up analogies that I use way too frequently. Here's the walk, guys. Everybody's got a plan till they get punched in the mouth. The walk's easy. When you're winning, when you're making money, or when you're simulator trading because it's not real. But that first losing streak where you lose 10 trades in a row, getting punched in the mouth for the first time. You know I'm right. Many of you are on a roller coaster ride where one day you feel like the world champ and the next day you feel like retiring because you stink so bad. You're on that roller coaster. You have no consistency. 1 month's great, next month sucks. Back and forth, back and forth. And when you're winning, the weekends are great. And when you're losing, the weekends stink. You're depressed all weekend. Tell me I'm wrong. The walk's tough. That's why so few people make it in the world at a high level. That's why so few people have successful run businesses. Because it's easier to work for somebody else. Let them take all the risk. Go punch in, clock out from 9 to 5. Get your paycheck, get your 401k, whatever, and then complain about your boss the whole time. Now, I'm not saying that's wrong. There's a lot of money to be made in that for some people. I'm just saying that 75% of people, you know the ones I'm talking about. That's not a way to do it. So again, talk is cheap, man. The walk is expensive. And I'm going to end with this one. This is the second time I've used this now. You guys are like, Jared, not again. Not again. Most of you are going to fail. You guys are like, why am I listening to you, Jared? You're going to demotivate me. Nope. I'm trying to motivate you with the opposite or the inverse of an idea, which is what psychologists tell you not to do, right? A psychologist would tell you, motivate with the positive of an idea. Don't motivate with the negative of an idea, right? John McEnroe is few and far between. Shit, young kids don't even know who John McEnroe is. My daughter the other day, she's like, who's Tiger Woods? I'm like, really? You're 12. It's not that old. Serious. She's like, who's Tiger Woods? I'm like, oh boy. Point. Most of you are going to fail. That's right. Motivate with a stick, not a carrot. Why? Because the people that generally succeed are the ones that won't take no for an answer because they have to succeed. Right? They have to succeed. There's the difference between people who want to succeed and people who have to succeed. They need to succeed. You all think that way, but not everybody is that way. So most of you, your timeline's too short. You think you're special. You think you're different. You won't follow the rules. That's why it's circled in green. You don't have a plan, or if you do, you don't follow it. You're just simply not cut out for this level of personal accountability. But you just want it more because I just said you can't do it. No, it's not a takeaway for those of you in sales. Ooh, that was a nasty takeaway. No, it's not. I'm just telling you the God's honest truth. A year from now, 5% of you will still be here progressing, moving forward, and the other 95% will either be already quit, you already have quit, or just on the brink of quitting. It's the way it is. Doesn't mean you're a failure, just means this wasn't for you per se. Who knows? All right? Who knows? So, what are you going to do this year? That's the question. I cannot answer that question for you. Are you going to be better this year? Are you going to do what it takes to succeed this year? Are you going to make excuses, blow up your account? You guys know that throughout this year that I'm going to continue to get when will the insanity material, right? When will the insanity stop material? It's not going to stop getting emailed to me. I see names in the chat room right now. Most of those names won't be here next year. Fact. I've been doing this long enough to know. It's just a turnover business, man. It's a revolving door. You won't. You'll be off to greener pastures, perhaps. You don't like me, you'll move on. Maybe you'll do better elsewhere. You'll give up and quit. You'll curse me because I'm an asshole. Whatever. You'll have a million excuses, but you won't be here. And that's a fact. It's a statistical fact. I've been doing this long enough to know. I should take a screenshot of everybody here now, and next year, play it, show it. Some of you will, some of you won't. Again, this isn't me being negative. This is me telling you the challenge ahead of you. It's very tough, this business. But for the people that can make it work, it's an unbelievably wonderful business. Freedom, the flexibility, the time, it's awesome. But it's only for the few, right? It's only for the few. So just keep that in mind. When you're starting this business, for those of you that are newer, or maybe the people that are in their first year, you're not expected to set the world on fire your first year. You're expected to struggle mightily in your first year. In fact, your first year will be filled with struggles, mostly struggles. Very few victories, but mostly struggles. Don't be discouraged. That's normal. The first 2 or 3 years will be filled with that kind of stuff. And people go, that's ridiculous. You went to college for 4. You didn't think that was ridiculous. You might be an executive. You didn't get that in your first year or two. You didn't think that was ridiculous. But somehow not being super successful in 2 or 3 years in trading is ridiculous. But everything else in life suggests that that's impossible. So why should it be possible in trading? All right? So I'm going to leave you with that. Whether that motivated you, demotivated you, now you know what's required. Now you know how tough this damn business is. And nobody's going to give it to you. That's the positive. It's a meritocracy like you've never seen. It's not entirely fair. The big businesses, Goldman, JP Morgan, they have a big edge over us. But between you and me and your neighbor, it's as fair as it's going to get. Market doesn't care who you are, where you're from, what your background is, what your ethnicity, what your race. America doesn't care what nationality you are. The market doesn't give a shit. Why? Because the market doesn't know who you are. How could it care about something it doesn't even know about? That's the beauty of it. So if you make it, congratulations to you, you did it. If you fail, that's on you too. All right? So with that, I hope that you took something from this. It was a little bit scattered, this lecture, slightly, but I hope you took something from it. I'm Jared Wesley. We'll get back at it again next week.